You're watching Stock Watch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are Zwelakhe Mnguni from Benguela Global Fund Managers and Rowan Williams from Nitrogen Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, gents. I actually want to start off with, I think, a stock that might have been the biggest loser on the JSE today, and that is Motus. Down 14%. It just kept on slumping and slumping and slumping. Zwelakhe, not much room behind that stock. Talk to me about how you've assessed how markets have digested Motus's results today, and was it that bad? Someone actually earlier on had said that it's just an overreaction.
Yeah, I probably agree with that to some extent. I mean, I looked at the numbers they put out, and they say, I mean, for this financial year, they'd probably be flat. So I thought that's not a bad outcome if you are flat in terms of earnings, but the market's reaction was very severe. I suspect the level of debt was probably one consideration. The cash flows generated by operations were also a little weaker. But broadly speaking, I think there is also a concern that the business is moving away from their kind of customer, moving to more lower priced vehicles, and they're kind of getting under pressure in that particular area. So I would be inclined to say it's an overreaction. If rates continue to come down, hopefully they do, I think there could be a rebound in this stock.
Yeah, it's quite interesting because they've spoken about customers trading down, the competitive landscape. But also, at the same time, it seemed like, because they had said that the interim period was a tale of two quarters, and seeming that the second quarter was better, and even the outlook seems to be of an improved performance in the third quarter. I mean, Rowan, should that not have encouraged the market a little bit?
Yeah, we are seeing quite severe reactions on actual results announcements or trading updates. I think a lot was baked in terms of expectations. They also had quite a soft base against which they were trading. So, and there was meant to be quite a strong earnings recovery off that base. And I guess flat, although not too bad, is not great if you were expecting a significant bounce. I think consensus we were seeing was around up to 15% earnings growth for the year. So wow, that is significantly behind. And often what you see is the difference between consensus growth and actual growth is the share price movement on a particular day as sort of the market readjusts to the new outlook. So it does point to a very tough trading environment. I think generally, you know, the South African economy has been fairly slow. It's taking longer, I think, to turn around than people had hoped. So results are underwhelming often. And it's, they are losing market share to the entry-level Chinese vehicles and Suzuki, which has made a massive impact on the South African market. They sort of indicated they're going to be importing Tata entry-level vehicles, which shows you they need further vehicles in their range to compete effectively. So I think the market took this all together and was clearly very disappointed on the day.
All right. Well, let's go into education. There is a question here on Advtech, if it would be a buy. Zwelakhe, your thoughts on Advtech? I think the more diversified education counter on the JSE.
Yeah, I think it is trading a bit rich, but I do think that long term it's not a bad place to be in. I think they do have a very good value proposition to their clients. I'd be a little positive long term, but I think short term, I think it's a bit overdone.
It's quite interesting because I think a few days ago we saw a trading statement from Curro, and the market was pretty disappointed, just maybe in light of maybe pressure in that schools area. Maybe Advtech a little bit more defensive. Rowan, what's your take?
Yes, I would agree. I think there is a bit of a market read-through from the current numbers, which were also fairly disappointing, or the update was disappointing, and those impairments were quite significant. But Advtech is a different business, as you mentioned, more diversified. Really, they have a large tertiary business, which is growing a lot faster than the primary and secondary education. And then they also have those African operations, which are also growing very nicely, and they've been expanding there. So I think if you have been a keen investor and you were looking for an entry point, just in the run-up to results, and there has been some share price weakness, it does present an opportunity. I think it is pretty full, but it has been one of the few growth stocks on the JSE. And so if you like the growth and the trajectory, we still like the company, and it's not a bad time to be adding to a position.
All right. Well, a company in which we saw very interesting moves is Nepie Rockcastle, and this is after glittering financial results. The question is, excellent year-end results from Nepie Rockcastle. I think that was yesterday or 2 days ago, but shares lost 4% in value that day. Any reason for that? Actually, quite a sharp drop in those shares, up slightly today, but really very, very small compared to the sharp drop that we had seen. Zwelakhe, they spoke about breaking records, but yet the market still sold off the stock. Anything notable that we should be seeing there?
Look, I think the numbers, I mean, if you look purely on the numbers, I mean, they were not bad, to be quite honest. I think the market may have priced in perhaps a lot more improvement. But if I look at it where it is today, I'd probably still say I've been trying to take it. It's one of the largest real estate listed retail real estate companies with exposure to Europe. So I'd be keen to probably allocate some capital to it.
Okay. So Zwelakhe, they're seeing a buying opportunity. On your end, Rowan, in terms of what could have moved that share price down, and maybe if there isn't, maybe if this is a chance for someone to get in who is not already in the stock.
Yeah, so again, I think you're right. It's just expectations are often fairly high leading into results. And even though, as you say, the numbers were good, and I think the operational metrics were particularly good, maybe the debt was a little bit higher than people had hoped. But it's obviously Kuma distribution here, and they often allow you to reinvest and take your dividend in scrip. So that is quite attractive. And again, if you are bullish on European property, Central and Eastern Europe, it is a quality counter and has continued to deliver. So I think it will give you a good yield and pull back maybe a nice entry point again.
Right. Well, there's a question on Ayoko. Of course, that is the new name for EOH. I'm just looking for it here. Is it a buy after its run up to R3.15? Well, I think at this point it's about R3.05, R3.06. Is it a buy after that? And obviously looking at the executive changes and that it's making a profit again. Zwelakhe, I do know that I think half of the analysts that I speak to don't even look at it anymore, once bitten, twice shy. But I mean, some do maybe see some opportunity for a recovery there. What's your take?
Look, it's a turnaround story, and I think they've been battling to get a turnaround coming through. And I suspect the name change was kind of to shake off some of the previous bad press that they had. I'm still not convinced that they have a strong enough value proposition to attract new customers. I think where they are very strong is where they develop software for clients that makes that business a bit sticky. But I think broadly speaking, it's a business that is facing challenges, and I'm not so convinced that the turnaround will be as smooth as they are. And we've run quotations on managed IT services. They're one of the most expensive. So that kind of gave me a sense that, I mean, they probably overpriced their proposition, and they actually are facing some bad press behind them. So it doesn't. I don't think that it will be an easy turnaround.
Yeah, well, they've really done a lot to give the business a makeover there, just even on the leadership front, with the joint CEOs now looking at what in investor activism there. Rowan, do you think that that could maybe meaningfully filter through to a significant turnaround, or maybe that also that it just could take a lot of time?
Yeah, we have seen some talented management teams coming into some fairly difficult situations and actually doing a great job. If you look at the Novus team, what they did there, they're making a move on Mustek as well. So there's some precedent. So I think you've got to look at the management in that new team and what they're doing, what their plans are. If they're able to de-gear the business, they can grow the equity value quite quickly. And find the core competence of the business, the niches that they have, and extract value from their clients. I guess even Altron in a similar space has been an incredible story under the new management. So it is probably worth a close look. I've lost a bit of touch sort of with the details of the stock, but it could be an interesting story. But I think it does come down to management execution, given the difficult situation that it's sort of had in the past.
Gents, let's get into insurance. The question was actually sent yesterday on Old Mutual. Any specific reason why it jumped 5%? Not that I'm complaining, but I'm sure the viewer is complaining today because it's down almost 4%. Rowan, any take on what's been happening here?
Yeah, so it's one of the big insurers. We have seen some of the other insurers come with trading updates yesterday. In particular, Momentum Metropolitan came with a very strong update. We did actually see Sanlam come today with also a very strong update. So clearly the operating environment at the moment is quite favorable for the insurers. Old Mutual has lagged somewhat the market. It's lagged the other insurers as well in terms of growth. They seem to be making good progress with the bank and the launch there. So that's quite exciting. So I think it was sort of SA insurance beta that yesterday Old Mutual was seeing the positive from. But the share has been quite volatile. As you said, it gave almost all the gains back today. So, but it does look cheap based on embedded value metrics, and I guess that's what the market is looking at.
All right. Old Mutual, in terms of its position in that very, very competitive sector, Zwelakhe, but I mean also I'm guessing if then the environment is favorable, it should lift all boats, including Old Mutual, so maybe not a bad investment?
Yeah, look, I agree that it's cheap. I mean, but it's probably one that is cheap for a reason. I think it's in the insurance space, it's kind of lost its value proposition in a way, in that which part of the market are they focusing on? Are they focusing on the mass market as a major proposition, or are they trying to compete more higher up where the likes of Discovery are playing? I think that environment, there isn't clarity around the insurance business around that. I think the banking initiative might be exciting. It might enable them to utilize their capital more profitably. But I don't think it's a walk in the park. I mean, it's a hard business to run.
Yeah.
So they may face some challenges, but it's definitely cheap where it is. I mean, the others have run relatively harder.
All right. Well, gents, let us get into Adcorp. Does anyone have a view on Adcorp? It has been around for decades. Was well over 20 Rand a share pre-COVID and has not recovered, sitting at around 4.50 Rand. It has high margins and has a PE of around 5 times and over 6% dividend yield. Also feels like they will be a massive beneficiary of any uplift in growth in SA and or Australia. I think I've been talking to the CEO of Adcorp for the past 2 years, and it's been quite a mixture of results that we have seen out of them. But I think in the last set of numbers, things seem to look better. Rowan?
Yeah, so the viewer summed it up quite nicely. I think that's is the investment proposition, good valuation metrics, and well geared to any upside in the South African and Australian economies. It's been very much a work in progress. As you said, the business has been around for a long time. It's had its ups and downs, and sort of some forms of reincarnation, buying and selling various assets. But it is focused on recruiting, resourcing. And so the uptick we're hoping and looking for and expecting, a lot of the forecast for GDP growth between 1.5%-2% this year. If we do see that, I think Adcorp will be a beneficiary, and so it is quite affordable. It's quite cheap here. So I think it is actually quite an interesting one to have a closer look at.
But I wonder how much of an uplift, because even with obviously we know the filtering through of momentum from high economic growth to the employment figures, but at the same time, it seems like when it filters through, it's only a little bit, and sometimes it doesn't even move the dial. Zwelakhe, on your side, I mean, just looking at the current figures and the current forecast that we are seeing with economic growth, do you think that it could filter through significantly to Adcorp? Maybe that's, would take a while.
Yeah, look, I think they'd probably benefit. I mean, if the environment improves, historically, it was a very well-done business in terms of that side, the recruitment side of the business. But I think they've faced a lot of competition, and they've also seen a lot of loss of contracts putting them under pressure. But I think if we see job creation, they might be a major beneficiary in that. But the filter through might not be as great as maybe one would like. The valuation reflects that, and I think it's probably cheap at this level.
All right, well, let's go into construction. Your view on Raubex. The price has been dropping for 6 months despite having glowing results, and the results have been growing more glowing with each earnings report that they put out. Could this maybe not be a case of that investors are not really concerned about the fundamentals, but maybe taking some profits, Rowan?
Yeah, certainly. I think what happened was you saw a lot of these stocks in Raubex actually had a very good run, and that sort of moved up then out of anticipation. There was a lot of improvement in sentiment post the elections, which is June of last year. So that's like 8 months ago, and I guess we're still waiting for the significant impact from the sort of change in leadership or government to the economy, the real economy. So. I think it is interesting, though, because there was mooted to be quite significant infrastructure investment in this delayed budget. And if that comes through, that was partly what the significant VAT hikes were meant to help fund. Raubex, again, would be a beneficiary there. I think Sanral and investments in roads has been quite positive. So it might be an attractive entry point here that the recovery is coming, but it's just been delayed. And so this sort of pause and a hiatus might be, again, a nice entry point in the stock.
Yeah, it's quite interesting because you've seen, for example, counters like PPC with this infrastructure investment that's just been taking longer than anticipated. You see counters like PPC actually getting punished and actually seeing it in the numbers. But with Raubex, it seems that they have remained resilient even without that significant infrastructure investment. Your take on Raubex, Zwelakhe?
I think it's quite cheap. I think obviously there is a lot that hangs around the infrastructure spend. I mean, we've got a budget that is now stuck. We don't know what changes are going to be made. There were lots of promises around infrastructure. If that doesn't come through, I think this current valuation will probably stick around. If we see movement in the infrastructure space, I think they'll definitely benefit. I mean, Sanral has been a good client of theirs, so they've benefited from that.
All right. Well, let's go into MultiChoice. Of course, we do have the overhang of the Canal deal. Judging by the last press release about the Canal takeover and retaining the broadcast license in SA, does the takeover seem likely, Rowan?
Yeah, it certainly is all about the Canal Plus takeover. It does look like it's making steady progress, and they're finding solutions to the regulatory hurdles, that local ownership hurdle. And we're still waiting on the competition authority. So there's still a lot that has to be decided upon. I think the risk is, if for whatever reason there is a trip up with the transaction, MultiChoice has had quite a tough operating period while it's been under this offer, and is spending a lot more money on Showmax than I think the market will like or was anticipated. So it's a little bit binary. If it goes ahead, it will go up to the offer price, 125. But if it fails, it could go very low. There would be a significant overhang as well, because Canal Plus is bought up beyond the 35%. So it's quite a complex situation. I think you need to follow it quite closely. It's a little bit risky for our taste.
Well, without this canal deal, Zwelakhe, what would you be doing with MultiChoice?
Yeah, I mean, I'd be a bit cautious without the canal deal. I think the canal deal kind of speeds up value unlock. There's a lot of work that they have to do on the African operations, and also try to compete with the internationals like Netflix here in South Africa. I think there's going to be challenges unless they can maybe come up with bundling plans that are beneficial, and that means a bit of margin pressure.
All right, gents, let us get to your stock picks for today. Rowan, what are you choosing?
We're going with Momentum Group. So as I mentioned, they came with a very positive trading update yesterday. The business seems to be doing incredibly well. They've also been going through quite a significant restructuring and turnaround, cutting costs dramatically. They've got very nice exposure across the broad financial services sector in insurance, but also quite a lot in short-term insurance. We've seen very good numbers coming out of that. They also have an interesting operation in India, which healthcare operation, which I think has a lot of optionality. It's taking some time to get traction, but if that does grow as expected, then that will has the potential to create significant value. So you've got some optionality there. So very strong fundamental business with some interesting upside opportunities.
All right. What are you betting on, Zwelakhe?
I'll go Shoprite. I think it's trading at a premium to its peers, but I think their execution has been phenomenal, and they've been actually gaining market share against peers. So I do think that it's probably trading at about 22 times for it. So I do think that it will unwind that multiple, and I think it's a safer bet amongst the players. There are those that are cheap, but I think the execution has been iffy.
All right. Well, thank you so much for your time, gents, and for your analysis today. That is all for Stockwatch tonight. Thanks to our guests, Zwelakhe Mnguni from Benguela Global Fund Managers and Rowan Williams from Nitrogen Fund Managers. Do note, Stockwatch will be live at 12:30 tomorrow. Be sure to send your questions early via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. Up next, though, the closer. Stay watching.